Hey, what's up everyone? This is Silver Slayer. Thank you for tuning into this video. Precious metals are in the spotlight. Everyone is trying to get their hands on some gold and silver. Now with that said, a lot of people don't know which direction to go. Should you invest into gold or should you invest into silver today? In this video, we're going to be talking about how the two compare as investments. Hopefully by the end of this video, you will have a better understanding on which direction you want to go for your stacking strategy. So before we start, make sure to smash that like button. Make sure you're subscribed because I post daily videos. This is Silver Slayer. Let's jump into the video. So silver versus gold. How the two metals compare as investments. The world's two best known precious metals have surged this year, but there are differences that investors need to consider. And I invest into a little bit of gold and silver. My focus is primarily on silver for a lot of reasons that this article will probably explain, as well as some stuff I'll talk about later into the video. But you still do need to diversify. Diversification is key, especially with precious metals, as they do offer different advantages and benefits, you know, that some of the metals or that gold offers that silver doesn't, or vice versa. So far this year, investors in gold and silver have made out like bandits, especially when you compare the returns of the world's two best known precious metals with those of stocks. The SPDR Gold Shares, GLD, an exchange-traded fund that tracks the price of bullion, and iShares Silver Trust, SLV, an ETF that tracks silver prices, were up 30% and 36%, respectively, through July 31st. That compares to a measly 1.5% gain for the SPDR S&P 500. This tracks the S&P 500 stock index. So, as investments, gold and silver are similar in that they don't pay dividends and both require investors to pay storage costs. But there are differences that could make one of the metals more suitable for a specific investor's portfolio than the other, or neither suitable at all, right? Just because you want to get into precious metals doesn't mean it's the best suit for you. Everyone has different stacking strategies, different financial situations, live in different parts of the world, have different goals, different exit strategies, right? Different resources. It really does depend upon a lot of different things. Precious metals are the safest, smartest alternative to the dollar. It's the safest, smartest investment. But you still got to understand and figure out which direction you want to go. So number one is liquidity. The gold market is far more liquid than the silver market. And that can be true. More people are attracted to gold. Gold is a royal metal. It's a much bigger market, so it can be easier to sell. People, when you have gold, people want it. Silver, a lot of people don't understand silver's value or its true value. We talk about that a lot on this channel, but doesn't mean just because we see it and we understand it, doesn't mean everyone else does as well. It also is larger in terms of the value of its annual supply. In 2019, the gold market was valued at $24.5 trillion, more than 5 times that of the $4.4 trillion value of the silver market. So the gold market is much bigger. It definitely is much bigger, but that doesn't mean it's better. While individual investors can easily trade into and out of holdings of both gold and silver, better liquidity means it's easier for investors who want to make large purchases or sales of gold to do so without moving the price of the commodity. So something to think about, right? Something to think about. One of the main things that I see that gold has that silver doesn't is you can store large amounts of value in a small area. You can fit $100,000 of gold in a shoebox. You cannot do that with silver, right? But anything else though, I still think silver is better and has more potential and more opportunity. It's cheaper, it's more affordable, it's more volatile. It's definitely a smarter investment in my eyes, but I still want to keep an open mind and share, because just because it's the better investment for me, you might have a different situation on your hands. So 2 is volatility. The silver market is more volatile than the gold market, which can be a good thing or a bad thing, depending on the type of investor involved, right? Volatility can definitely work for you or it can play against you. That means it hits higher highs, but it also means it hits lower lows. It's like gold on steroids. If gold's going to rise 15-20%, silver is going to be rising 30-40%, but it also goes the other way around. If gold's going to drop 15-20%, silver's going to drop 30-40%. So you got to be careful. So for traders wanting to make money from run up in prices, silver's additional volatility is helpful, because more volatility means larger price swings for traders that can try to exploit it. So why is silver more volatile? It's because the size of the market, and that's so true. Silver is an extremely small market, so when money goes into it or comes out of it, it influences the prices. So here's another thing I wanna throw in there. Silver is the most highly conductive metal for thermal conductivity and electricity. It's widely used in the industrial world. So not only is it a monetary metal, it's also an industrial metal, meaning if the economy's in bad shape, silver will rise. If the economy's in good shape, silver will rise. Where gold is only a monetary metal, so gold only rises when the economy's in bad shape. Silver, since it's so intertwined with technology, with laptops, with cell phones, with so many different things in 5G technology, solar panels, electric vehicles, even when the economy's doing good and all of these products, all of these things are being used and bought and transported across the globe, this still pushes silver production and silver supply higher. Diversification is number 3. Many investors add precious metals to their portfolio because the prices of these assets tend to be uncorrelated to those of silver securities or other securities such as stocks and bonds, thus reducing overall portfolio risk. And that can be true. I mean, when it comes to diversification, gold has the edge over silver. Silver is more linked to the business cycle. Gold is more disconnected and more uncorrelated to everything. Typically, central banks buy gold, not silver, as a way to diversify the risk of holding other currencies, including US dollar. So, number 4, storage costs. Investments in silver or gold are associated with certain expenses. And that's, keeping a custodian, or whether you're in the ETF side of things. I always say, if you can't hold it, you don't own it. So you want to be careful on where you're investing. The ETF side of it, exchange traded funds, with the digital side, is definitely, it's ironic. It's kind of missing the whole point. The whole point of precious metals. The whole point of precious metals is to be in complete control of your wealth, of your finances. And if you're investing into the ETF side of it, then you're still basically doing it from a dollar basis or a dollar terms. So you really, in my opinion, you really want to focus on the physical metal. There's a lot of advantages with it as well, especially if you're in this for the SHTF side of things. Your silver can't be stored halfway across the world in some vault with some custodian or some middleman that you don't even know his first name from, and expect to really own that silver, right? Do you really own that? Or are they just saying that you own it? And is it even really there? Again, there is a difference in how this affects gold and silver investments. So it goes into, ETFs for mutual funds and all this. I'm not going to get into this because I really do want to stress and really share and showcase why you should buy the physical investment. Now, if you're still on the fence about whether gold or silver is the direction you want to go, let me put it like this. The gold to silver ratio is something that measures, it's a tool, it's a guide to see how many ounces of silver it takes to buy 1 ounce of gold. Historically, it used to be around 8 to 1, 16 to 1, because that's close to the ratio that it comes out of the ground, right? Every about 8 ounces of silver we dig out of the ground, we find 1 ounce of gold. Now, why is the gold to silver ratio in the mid 70s today? 70s. This means that either A, gold is extremely overpriced, or silver is B, underpriced. And if you look at it, gold is not that high compared to the bigger picture. So this means silver is underpriced. Silver is undervalued. Also meaning silver is the better buy. The gold to silver ratio will start to normalize, will start to correct, meaning silver will outperform its big brother, which is gold. So silver has more potential, more opportunity. You definitely want to look into that, especially if you're someone who likes precious metals for not only just as a quick flip, but later down the line. A lot of people aren't planning on selling for 10, 20, 30 years. That's like me. I'm only 28 years old, so I don't plan on selling for 15, 20, 25 years down the line. And if you really want to look at it from that perspective, from that big of a picture, then I definitely think that silver will play perfect in your portfolio. With that said, I'm going to wrap this video up here. If you want to check out this article, link is in the description. Check out my second channel as well, Silver Slayer 2, if you want to dive more into the financial, the monetary perspective of things. Thanks for tuning in. This was Silver Slayer. I'll see you guys soon. Peace.